When you look at this week's market data for Toronto and York region, you start seeing a pretty clear pattern is forming. Let's walk through the numbers and see what they're actually telling us. Hi, my name is Marco Momeni, realtor and broker with 24 years experience. Let's look at what's happening across the GTA real estate market right now without the noise, just the trends. November recorded 5,010 sales in the GTA. That's 16% lower than the last year. New listings were also down about 4% year over year. On a month-to-month basis, both sales and listings dipped slightly compared to October. So overall, the market is moving in a slower, more cautious way. The average selling price for November was $1,039,458, which is 6.4% lower than last year. But compared to October, prices barely moved. This tells us the major correction is behind us, and now the market is more stable. Year-over-year sales are down from 5,947 to 5,010, but comparing October to November, this shows only a mild decline. That's the pattern throughout the data. The market is not accelerating right, but it's not falling apart either. So it's simply moving in a slower pace. The next slide is for the year-to-date sales of Toronto and York region. In Toronto, year-to-date sales are down about 15%. Both freehold and condo numbers reflect the same softer demand. This aligned with what we've been seeing on the ground. Fewer buyers, longer decision cycles, and a more patient market. Next slide is for the York region year-to-date sales. In York region, year-to-date sales are down about 12% in condos and 17% in freeholds. York is almost always more sensitive to the interest rates, so these declines actually make sense. Looking at freehold sales across Toronto C districts, activities changes from one district to the other. Some areas like C10, C11, and C12 had very low number of sales, while others like C4, C15, and C13 performed noticeably better. This reminds us that the Toronto market doesn't perform all equally, and micro markets does matter. The inventory slide tells us a more interesting story. C10 and 11 have very low MOI, which means whatever is priced properly in those areas tends to get absorbed relatively very quickly. On the other hand, C7, C12, C14, and C15 show much higher MOI, indicating slower absorption and more choice for buyers in those pockets. So the GTA market isn't simply slow or busy. You have micro markets where things go very fast, right beside areas that listings stay on the market for a longer time. So a strategy has to match those local markets. In Toronto, new listings have been declining steadily each week. Showings have also been tapering off, and while sales are holding steady, they are trending slightly lower. This reflects a market that is slowing down but is not collapsing. There are fewer buyers out there for sure, but the buyers on the market are still engaging. In this slide, let's look at the York weekly trends. York shows a similar patterns: falling listings, fewer showings, and lower offer counts, but sales remained relatively steady, just at a reduced volume. York is essentially in a slow, balanced phase, not bullish, but not distressed either. In this slide, I'd like to show you the long-term price history based on TRREB average price history. The long-term TRREB price chart, going back all the way to 1980, gives important context. Despite multiple recessions, rate cycles, and market shocks, the GTA has always trends upward over the long run. Yes, maybe we have the short-term dips, but the bigger picture has been always positively consistent. When you pull all this data together, here's the simplest way to describe it. Activity is slower, buyers are more cautious, inventory is thinning in some areas and building up on others, and prices are mostly holding their ground. It's a quiet, steady market, not moving sharply in any direction, waiting for a clear signal from interest rates and financial conditions. I'll see you in the next video.